In this presentation, we will create invoices within QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the Open Windows open. You can open the Open Windows by selecting the View dropdown and the Open Windows list. We're going to be creating invoices. I think the best way to think about the invoicing process is to go to the Customer section within the Home tab and look here at the invoice. We're going to be creating an invoice, and then we will receive payment on it, and then we will be making deposits with them. When thinking about the invoice, note the invoice is the type of document that most people would want to basically have set up so that anybody that's in the sales position can basically enter the invoice. We can enter the invoice because we had already set up the items within it, meaning we already went to lists in the dropdown, item lists, and we set up both service items, the things that we do for customers in order to earn revenue, and inventory items, the things that we sell in order to earn revenue. Those have already been set up. Therefore, when billing the client, in other words, invoicing, those items will already be included within the item tab, making the invoicing process very easy. So to populate an invoice once everything is set up should be very easy to do, to go to those items and set them up. Take a look at that. Also note, there's a difference between the invoice and the create sales receipt. They're in essence very similar but the difference will be that you create an invoice when you want accounts receivable to go up and you want sales to go up. In other words, you did work and you want to bill for that work, invoicing for that work, or you send inventory out, but you have not yet received payment at the same point in time. You're going to get paid at some point in the future, and therefore you're sending out the bill, the invoice, and you expect payment at some future point. Therefore, to track the payment that you expect to receive will be done in an account called accounts receivable, as opposed to a sales receipt, which you can kind of think of as is indicated by this little tab here, something that you would be getting at the cash register. You would give this at the cash register. You can think of, you're giving the receipt back, meaning it's still going to record the increase in revenue, but the other side is going to be some kind of cash account going up. In this case, undeposited funds. We'll talk about that later. Over here, we're going to think about this item, creating the invoice where accounts receivable will go up. We haven't got payment yet, and we'll record the sale. If there's inventory involved, as there will be here, there's another side to it as well, that being cost of goods sold and inventory. Let's take a look at the financial statements first and get an idea of what we expect to happen when we record the invoice. Note, as you record the invoice, most people don't understand what will happen fully. That's okay. It's just a data input screen. People just fill out the data input. That's fine. But when we manage the QuickBooks file, we want to then be able to know how to set up the invoice so anybody can do it and put it together very easily with just simple data input process, as we've seen in prior presentations, to set up the item list. And we need to know what the effect will be on the financial statements so we can make sure that we have an idea of what is going on with the actual financials, why we're invoicing. If we select the reports drop down up top, company and financial, we're going to go to the balance sheet first, changing the dates. This time I'm going to go to the customized date to set a date range. Customized date, I'm going to set it from 01/01/20 to 12/31/20. That means when we zoom in, it'll give us that range. If I set OK, it only shows one date up top, but when we zoom in, it will then give us a range. Then the other side of the report is going to be reports, company and financial, profit and loss, setting the date range from 01/01/20 to 12/31/20. And so no activity as of yet. We're going to start activity now with the invoicing. Final report I'd like to keep open as we enter this. Reports is going to be accounting and taxes and the trial balance. Date range once again being 01/01/20. 12/31/20, there's going to be our trial balance. Now I'm going to think about what happens on the trial balance because all the accounts will be here. So we're going to say that what's going to be happening on the trial balance, the accounts receivable will go up, and then the income will go up. Now we don't have an income account yet because we haven't recorded anything to it. It will be here once we record it. The sales account will go up. Also, the account that's going to go down is inventory is going to go down, and the income account, kind of like an expense account or an expense account called cost of goods sold, will go up on the other side. That's what we expect to happen when we create an invoice. Let's do it. Let's see it. We go to the Home tab. we're going to create an invoice. Now, after I've gone through all that, just remember when we create the invoice, that if it's just a data input from a data input standpoint, we don't need to know any of that. But if you really want to function QuickBooks to set it up and run it properly, then you kind of do need to know that. So we're going to say create the invoice, and we're going to set up the customer that we're selling to. We're imagining that we sold a guitar, right? And now we're billing the customer. And the guitar was sold to the customer of Anderson Guitars. There is Anderson. If we simply just populate Anderson up top, it'll start to autofill for us. As it does so, I'm just going to select tab when it picks it, and that'll pick it up. The date is going to be January 12th. We will keep that date. Invoice is now populating the number for us, number 2. I'm going to keep that. Tabbing through. Actually, I think this is actually the first invoice. It should be number 1. It's because I hit a test invoice before this. And then the terms, I'm going to set the terms to be net 30. Let's set net 30 terms. I'm going to set that as the terms. And we'll say standard. I'm going to keep that. Okay. And then we're going to say the item is going to be an SSB or the Steinberger solid body. You can select it here, or you could just simply start typing it in there. Once again, it'll autofill, and you can select tab to tab across. We're going to have one of those. It'll populate the description for us, and you'll see how easy it was to set this up, because it's just all we need to know is say, we can imagine someone, our employee, setting this up, and you're saying, yeah, we're billing Anderson for this item. All you have to do is pick the item. You don't need to know what it costs. You don't need to know what you sell it for. It's going to populate the sales price for us here, and you don't need to know the effect on the financial statements. However, we want to know how to set it up and the effects. So here we have it. Notice that we're charging $410 for it. It will then populate the sales tax, given the sales tax due to the fact that it's going to be an inventory item. It's at 5%, the $20.50. That means the total is the $430.50. That's all we need to print this out, send the bill out. As we do so, we can print it here. We can print the bill. Or if I don't want to print it, I can unprint it here. I can use the printing up top to print it in this format. I can email the invoice, the bill, the invoice. And notice those terms can be a little bit confusing because we're billing the client with an invoice. We reserve the term bill for the bills that we enter when people bill us, or that's what we do within QuickBooks. So we're invoicing the client, and it's a bill. Obviously, on the other side of the transaction, when they receive our invoice, it's a bill to them. If they were to receive our invoice, they'd enter it in the system as a bill to them. So here we go. We could email the bill as well, and that could be useful. We can select the email later as well to see how we're going to deliver the invoice. Now, what's going to happen? Let's get deeper into it. What's going to happen to the financial statements when we record this invoice? Well, we know that we're going to increase the accounts receivable, and we know that by simply the fact that it's an invoice. Just like other forms, when you have a deposit slip, it means cash is going to go up. When you make an invoice, it means accounts receivable is going to go up, the account representing that people owe us money. The other side of accounts receivable is sales, so sales is going to go up. Accounts receivable is going to go up by $410. However, sales is only going to go up by, the accounts receivable is going to go up by $430, including the sales tax. However, sales is only going to go up by $410. The difference between those two is going to increase what we owe to the government for sales tax, a payable account, sales tax payable. That's not it, however. We also have the cost of goods sold. The cost of goods sold is going to go up the expense of the guitar that we're selling. We're consuming the guitar at this point in time, therefore recording the cost of goods sold. The other side being inventory going down. So given the fact that we're tracking inventory, it's a bit more complex to write the invoice. If it's just simply a service item, then we wouldn't have to deal with the cost of goods sold or inventory side. How does QuickBooks know what the cost of goods sold or inventory is? I don't see cost of goods sold or inventory here. It's in the lists. We set that up in the lists, item lists, and the items down here, and we just chose this item. If I double click on it, we set up the cost of goods sold. We will not see this number on the invoice because obviously we don't want to give the cost that we pay for the guitar on the invoice. However, QuickBooks knows it, and when we create the invoice, it will bill cost of goods sold and reduce inventory by this amount. Let's see that now. If I close this back out, we're going to go back to the create invoice, and we will then create this invoice. I'm going to say save and close. It's saying that we changed the terms down here, so I'm going to say, yeah, I want to keep that. And there we have that. And then I'm going to close this one out. I'm going to then go to the balance sheet. If we go up to the balance sheet, then we see within accounts receivable that $20,930. Double clicking on that, we see then that the invoice is here. It's in a split because it accounts for multiple other accounts. There's not just one other account involved in this transaction, as we've already seen. Double clicking on this, there's our invoice. Closing this back out, closing this back out. The other side of this part will be in the profit and loss. Opening up the profit and loss, we can see that we have the merchandise sales increasing. That's our income account to get to net income. Double clicking on that, we see that it is increasing here. Double clicking on it, back to the invoice. Closing this back out, closing this back out. Notice this is on the books for $410. Back to the balance sheet. We increased the receivable by the $430. Closing that back out. Difference going to a payable account. That's for the sales tax. It's going to be the sales tax payable, $20.50. It's a liability because we're going to have to pay that. We're going to accumulate the sales tax over the period, the month, the quarter, the year, whatever it may be, and then pay it to the government because we don't get to keep the sales tax. That's the point. So there's that side. Then the other side of this is going to happen is we're tracking inventory on a perpetual inventory system. So the inventory, if we double click on the inventory, we then see it decreasing by the 328. That number, the 328, if I double click on this, is not on the invoice, but the invoice is what's driving the 328 decrease given the fact that we set it up in the item list. Closing this back out, closing this back out. Other side of that amount is in the profit and loss in the open windows, going to cost of goods sold, 328, double clicking it. There's the 328, double clicking it. There's our invoice. It's not on the invoice, but of course there's the invoice that generated it. Closing these two back out. Note also, if we go back up to the balance sheet, we have now done something to the accounts receivable. We also need to know who owes us money. Here's how much money people owe us. Who owes us that money? Who are we going to go call and say, give us our money? Reports up top. We're going to go to the customers and receivable. We're going to go down to the customer balance detail. And we'll see the detail here. And we bought this from, we sold, invoiced Anderson for that $430.50. And there's the $20,930. That amount, closing this back out, is matching the parent account on the balance sheet. Also, inventory, we saw it go down. How do we know how many guitars we have? That's supporting documentation for inventory, reports. If we go to the drop down for inventory, we want the inventory valuation summary. And then we could see basically the transactions of what we have within the inventory. If I change the dates to 12/31/20, we have the detail of what is currently in the inventory. If we see the detail, we can see the transactions bottom line. However, we currently have in inventory $2,568. This is the retail price. This $2,568 is what is on the balance sheet. Closing this back out here. Okay, that was fun. Let's do this one more time. We'll make another invoice. We're going to go back to the Home tab. We're going to make another invoice. So we'll create an invoice once again. Create the invoice. This one's going to go to the customer. It's going to be Jones Guitars. Jones Guitars, we don't have, we do have here, populated. We could select here or simply type in Jones. It starts to populate as it does, and it's green here. I think I select tab on the keyboard, tabbing through, and we want the date to be the same date. That's good. Invoice numbers populating for us. That is good. I'm just going to tab through. I'll set the terms at net 30 here as well. And then we're going to say the item. The item is going to be a Gibson USA. We want to see the item is going to be a Gibson USA. Here it is. It's a GI USA. That's a nice name. So we're going to say GI USA. And there we have that tab. The quantity is going to be 1. And so it's a Gibson USA is populating for us. And now it's very easy to fill out the form. So to populate the invoice is not difficult. Setting up the items, knowing what the items do is the difficult part. Let's think about what's going to happen here. We know that the invoice means accounts receivable is going to go up. Accounts receivable is going to go up by not only the amount that we charged for, but the sales tax as well, the $399. The other side is going to go to sales revenue. However, it's only going to go up for what we charged for, not including the sales tax, to $380. The difference between the two, $19, will be increasing what we have to owe to somebody, a liability, that somebody being the government. So we're going to increase sales tax payable by 19. Because we're selling inventory and not service items, we're also going to have to record a decrease in the inventory then going down, not by the 380, but by some other number, which is driven by the lists. So we won't take a look at the lists again, but the list is what will have the cost of goods sold that will be driving down the inventory as we record the invoice. The other side then going to cost of goods sold, recording the expense that will be increasing as we consume the guitar, giving the guitar away in order to generate the revenue of the 380. Let's check that out now. We're going to say save and close, and we're going to say yes. If we go to the home tab, we see that the accounts receivable is going up. Double clicking on the accounts receivable, there's Jones Guitars, the $399 it went up by. Double clicking on it, that's the total including the sales tax. Closing that back out, closing this back out. If we go then to the profit and loss in the open windows, and we go to the merchandise sales, double clicking on it, we see that we have Jones Guitars, it going up by $380, which does not include the sales tax. That's what we charged, not including sales tax. The difference between the two being that 19. Closing this out, back to the balance sheet, that being in the liability account, sales tax payable that we owe to the government. We had to collect it and then pay it to the government, and we haven't paid it yet to the government. So there's the 19 there. Closing this back out, also, as we did this, inventory is going to go down. So inventory asset went down because we sold part of our inventory. Jones Guitars, there it is, it went down by $304. Double clicking on the invoice, we don't see $304 here. Why? Because it's driven by the item. We don't want the cost on the invoice, but we want the invoice to drive the decrease in our system to inventory. So we're going to close this back out, The other side of that $304 then being on the profit and loss, that's going to be in the cost of goods sold. Within the cost of goods sold, there's the other side of the $304. Now, this all might be a little bit easier to see if you just look at the trial balance at this point. You just notice in the accounts that will be affected, accounts receivable then going up, the other side merchandise inventory. Then we have the sales tax being the difference between the two here. We also know the inventory is going to go down, and the cost of goods sold now is going to go up. Now, the debits and credits could throw you off here, but notice this gives you a nice list of accounts that's easier to see in one place, both balance sheet and income statement accounts. Clearly now we can also go to the reports up top. We got the 21,329 reports. If we go to the customers and receivables and we look at the customer balance detail, and we can then see that we have the Jones, the $399 there. And then we also have, of course, the inventory at the 2264 reports drop down. If we then go to the inventory, we can go to the inventory summary for 12/31/20, and we got the 2264 here as well. 2264 matching out to the 2264. Now the next step within this process, if we go back to the home tab, we've made an invoice. Next is we're going to receive payment. In other words, we could think about mailing or emailing the invoice. We expect to receive a payment in the mail. Once we receive the payment and record here, it will typically go, if we keep the default settings in QuickBooks, into an undeposited cash fund, undeposited funds, and decrease accounts receivable. Then we'll take however many receipts that we have, batch them together, record them or deposit them all at the same time with the deposit icon here. That's what we can expect to see.